Imagine a stream of income that comes to you every single month, whether you're working, sleeping, or sipping margaritas on the beach. That's the power of dividends. Now let's dive a bit deeper. Dividends are essentially a portion of a company's earnings distributed to shareholders. Picture it as your slice of the company's profit pie, served up regularly just for being an investor. This can be a reliable source of passive income, a financial cushion that keeps growing even when you're not actively working for it. Now you might be wondering, how can I get a piece of this? That's where exchange-traded funds, or ETFs, come into play. ETFs allow you to invest in a diversified portfolio of dividend-paying stocks. Instead of picking and choosing individual stocks, you're spreading your investment across a wide range of companies. And what if I told you there are ETFs out there that pay dividends every month? Intrigued? Stay tuned. Hello viewers, if you are enjoying this content and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. First on our list is JEPI, an ETF that offers the perfect blend of growth and income potential. Now you may wonder, what makes JEPI stand out in the vast sea of ETFs? Well, it's all about the strategy that underpins it. JEPI, or the JP Morgan Equity Premium Income ETF, embraces a unique approach to stock selection, focusing on quality companies with attractive valuations. This ETF isn't about chasing the hottest trends or the most hyped-up stocks. Instead, it's about finding solid, reliable companies that have consistently demonstrated their value. It's about companies that are stable, profitable, and poised for growth, but are also priced reasonably in the market. This careful selection process is one of the reasons why JEPI has managed to deliver impressive results. But the allure of JEPI doesn't stop at its stock selection. It's also about the way it generates income. See, JEPI isn't just about capital appreciation. It's also about delivering a steady stream of income to its investors. And it does this through monthly dividend payments. Yes, you heard that right. JEPI pays dividends on a monthly basis. This means that as an investor, you're not just waiting around for quarterly or annual dividend payments. Instead, you're receiving a steady, reliable stream of income every single month. This can be a game changer, especially for those who rely on their investments for income. And let's not forget about the yield. JEPI offers an impressive yield, which is a testament to its strong performance and its commitment to delivering value to its investors. This high yield, combined with the monthly dividend payments, makes JEPI an incredibly attractive choice for income-focused investors. JEPI is all about taking a new approach to income investing. It's about blending growth and income potential, focusing on quality over hype, and delivering a steady stream of income through monthly dividends. It's about offering an impressive yield and providing investors with a reliable, income-generating investment option. So if you're looking for an innovative approach to income investing, JEPI might just be your ticket. Next up is DIVO, an ETF that uses option strategies to generate income. Now you may be wondering, what exactly does that mean? Well, let's dive into the world of options. In the simplest terms, options are financial instruments that are derived from the value of underlying securities such as stocks. An option strategy involves buying and selling options to profit from market movements, and it's a tool that can offer investors potential for greater returns. So, how does DIVO use this strategy? DIVO leverages options in a way that is designed to enhance yield. This means that it uses them to try and generate a higher income than what might be traditionally expected from a standard ETF. It does this by writing or selling options. When you write an option, you're essentially selling someone else the right to buy or sell a security at a predetermined price. This process generates income, which is then passed on to the investors. Now, this might sound a bit complex, but that's where the beauty of an ETF like DIVO comes in. As an investor, you don't have to get involved in the nitty-gritty of options trading. DIVO does all the hard work for you, while you simply enjoy the benefits of a potentially higher yield. Speaking of benefits, let's talk about performance. Despite the increased complexity, DIVO has demonstrated a strong and consistent performance over time. It has been able to provide a steady stream of income to its investors, which is a valuable trait in the unpredictable world of investing. So, if you're an investor who is comfortable with a bit more complexity and is seeking a potentially higher yield, DIVO and its unique approach could be an excellent addition to your portfolio. It offers a different avenue for income generation, one that is built on the power of options and the potential they hold. If you're comfortable with a bit more complexity, DIVO's unique approach could be a great addition to your portfolio. Let's continue our journey with DGRW, JEPQ, QYLD, and QQQI, 4 more monthly dividend ETFs that deserve your attention. First up, we have the Wisdom Tree U.S. Quality Dividend Growth Fund, or DGRW for short. This fund seeks to track the investment results of high dividend-yielding U.S. companies with growth characteristics. It's an opportunity to invest in companies that are not only paying out dividends, but also display the potential for future growth. So, if you love the idea of combining growth and income, DGRW might just be your kind of ETF. Next on our list is JEPQ, also known as the Jefferies Equity Premium Income ETF. This fund uses a covered call strategy which can generate additional income from stock holdings. By selling call options on its equity holdings, JEPQ earns premiums that are then distributed to shareholders. This ETF can be a great addition to your portfolio if you're looking to amp up your income without taking on excessive risk. Now let's talk about QYLD, the Global X Nasdaq 100 Covered Call ETF. This fund uses a similar strategy to JEPQ, but with a twist. QYLD focuses on the tech-heavy Nasdaq 100 index, selling call options on its holdings and passing the premiums on to shareholders. If you're a tech enthusiast who also appreciates a steady income stream, QYLD might be worth a second look. Last, but certainly not least, is QQQI, the Invesco Nasdaq 100 Innovation Suite ETF. This fund gives investors exposure to the innovative companies of the Nasdaq 100, but with a risk management twist. It uses a strategy that can potentially lower volatility and provide downside protection, making it a unique option for those who want to dip their toes into the world of tech without getting soaked. Now, you might be wondering, why bother with all these different ETFs? Why not just stick to one? Well, the answer lies in one word: diversification. By spreading your investments across different ETFs, you can potentially reduce risk and enhance returns. Each of these ETFs brings something unique to the table, from growth potential to income generation to risk management. Together, they can help create a well-rounded portfolio that suits your individual needs and goals. Remember, investing isn't a one-size-fits-all game. What works for one person might not work for another. It's all about finding the right balance for you. And with these ETFs, you have plenty of options to choose from. Whether you're a conservative investor or a risk taker, there's a monthly dividend ETF out there for you. So there you have it, 6 monthly dividend ETFs that could supercharge your income stream. Let's quickly revisit each of these powerful performers. JEPI, the ETF that introduced us to a new approach to income, combines the growth potential of equities with the steady income of bonds. Then we have DIVO, harnessing the power of options to provide a reliable return regardless of market conditions. DGRW, JEPQ, QYLD, and QQQI, these 4 ETFs complete our list of the best. Each has its unique strengths. DGRW focuses on dividend growth, JEPQ offers global exposure, QYLD uses covered call options to generate income, and QQQI is an international play on the technology sector. Remember, these aren't just ordinary ETFs. They pay dividends on a monthly basis. That means 12 income payments a year instead of the usual 4. In the world of investing, that's a game changer. It's the difference between waiting for a quarterly paycheck and having a steady monthly income. It's the power to reinvest your returns more frequently, which could lead to greater compounding over time. But, as always, it's important to do your own research before jumping in. Investing is a personal journey, and what works for one person may not work for another. Consider your financial goals, your risk tolerance, and your investment horizon. And don't hesitate to seek professional advice if you need it. These 6 ETFs provide a starting point, a way to potentially supercharge your income stream. But the world of investing is vast and ever-changing. Stay curious, stay informed, and never stop learning. If you found this video helpful, don't forget to subscribe, like, and share. And remember, the journey to financial freedom starts with a single step. Why not take that step today?